Hey, good morning everybody. Today is Friday, April 29th, 2016. My name is Cliff Backus, and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning by taking a look at our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 16 came from the precious metals industry. 5 came from healthcare, 5 came from commercial vehicles, and rounding out the top 5, we had application software, medical devices, and waste management, all with 4 stocks each in the 100 most powerful stocks in the most powerful industry groups. Recently, we've been seeing a lot of precious metals, we've been seeing a lot of healthcare facilities, and a lot of medical devices. These may be good places to look for leadership in this market. Let's start today by taking a quick look at the Russell 2000. As we've been noting, I think the Russell is the key to the market going forward. Note how yesterday the Russell came back, it tested support down here in the 1140 area and held. We'll watch to see if the Russell can continue to hold that area. If it does, the next significant area of resistance is all the way up here at the old high in the 1205 range. If the Russell was to break down, we would have minor support down here at the 200-day moving average that we show in black, and a little bit more significant support down here in the 1079 range. Let's see what the NASDAQ Composite's up to. But before we do that, stocks sold off with some gusto yesterday, with both the S&P 500 and the NASDAQ adding distribution days to their count. A distribution day is a trading session where the S&P 500 or the NASDAQ closes at least 0.2% lower on heavier trading volume than the prior day. Distribution is a sign of institutional or professional selling in the market, and too many distribution days in a short period can indicate the uptrend is in trouble. Current distribution levels are a serious concern. As a result, the current market outlook is an uptrend under pressure, according to investors.com. Meanwhile, our market timing model remains on a buy signal for the S&P 500, but the NASDAQ closed below its 200-day moving average yesterday, blowing right through our don't buy signal and going directly to a sell signal. The buy signal on the S&P indicates that conservative traders can buy, but shouldn't be increasing margin at this point. A sell signal on the NASDAQ indicates that aggressive traders should be off margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. Declining issues outpaced advancers yesterday by nearly 2 to 1. The New York Stock Exchange advanced decline line continues to look bullish. New highs bettered new lows. According to our Ramosi ratio, small capitalization stocks bettered large again yesterday and continue to outperform on a 10-day moving average basis. This also is a bullish indication. Bulls prefer to see small caps outperform. The market appears to be struggling to define short-term direction recently. While we're seeing signs of strain in the market, the sell signal on the NASDAQ sends a shot across the bow of the bulls. This is a good time to begin reducing any remaining margin in your portfolios. Be careful and keep your stops at their tightest levels. Okay. Yesterday, the NASDAQ Composite was down 57.85 points, or 1.19%. We closed at 48.05. And notice how we're now trading significantly below this area of resistance in the 4900 area. Yesterday we undercut the 200-day moving average, and more importantly, yesterday we undercut our 1% envelope on the NASDAQ. Our 10-day simple moving average is lower than it was the day before, and our 21-day exponential moving average is lower than it was 2 days ago. That's our definition of a don't buy signal. The fact that the S&P 500 is trading below the fact that the NASDAQ is trading below its 200-day moving average makes that don't buy signal into a sell signal. Trading volume yesterday was higher than the prior day, giving us another distribution day on the NASDAQ. Right now, the NASDAQ is indicating an uptrend under pressure. We've been in an uptrend since February 18th, but we have a lot of distribution. Right now, we have 7 distribution days on the NASDAQ in the past month. We have these 5 distribution days in the last 8 trading sessions. It's that heavy distribution recently that is the reason that investors.com is indicating that the uptrend is under pressure right now. Right now, the NASDAQ is bracketed by support here in the 4,900 area. Resistance in the 4,900 area and support down here in the 4,506 range. And as noted earlier, we are on a sell signal on the NASDAQ. Meanwhile, the S&P 500 yesterday was down 19.34 points, or 0.92%. We closed at 2075, and notice how the S&P 500 is still well above this lower envelope. The 21-day exponential moving average, which we show in pink, is still trending upward. It's higher than it was 2 days ago, while the 10-day simple moving average is below where it was yesterday. Because we're still above this envelope and the 21-day exponential moving average is higher than it was 2 days ago, the S&P 500 remains on a buy signal. Trading volume yesterday on the S&P was higher than the prior day, giving us another distribution day. The S&P is in an uptrend under pressure with 7 distribution days in the past month. That's a lot of distribution. It's the reason that the current outlook on the S&P 500 is uptrend under pressure. Note that on Monday, this distribution day will fall off of the count, which will reduce our count to 6 days cold comfort. The S&P is bracketed by support down here in the 2044 area and resistance up here in the 2116 range. Finally, as noted, the S&P 500 is on a buy signal. A buy signal on the S&P 500 indicates that conservative traders can buy but shouldn't be increasing margin on their portfolios at this point. The sell signal on the NASDAQ indicates that more aggressive traders should be off margin and can sell short. We should sell any position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions, and conservative traders may want to hedge their portfolios with contra ETFs. Before we go, I want to take a quick look at Facebook. As we know, Facebook provides a social networking platform enabling members to stay connected with friends and family via Facebook.com. On Wednesday after the close, Facebook reported much better than expected earnings, and yesterday gapped above this first stage cup with handle buy point at 116.99. The stock subsequently closed below that area, but that area would provide a good buy point for both conservative and aggressive investors, keeping in mind that the NASDAQ right now is on a sell signal, and so you want to be a little bit careful. But notice how the trading volume yesterday was well above the 140% average daily volume that we look for on a breakout. Facebook gets a 76% checklist rating. It's right now working on a first stage base on base formation. Notice how we had this base that we broke out of earlier, reset that base, and now we have another first stage base on top of the prior base. Facebook can be bought by, I think, aggressive and conservative traders here. The stock on a fundamental basis is one of my two favorite stocks on a long-term basis, and this provides a wonderful buying opportunity. Keep in mind that the NASDAQ is on a sell signal, and so you do want to keep your stops in place and keep them at their tightest levels. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate, or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.